In this episode, we speak with Michael Dominguez, Chief Investment Officer and Senior Managing Director at Providence Equity Partners, a leading private equity firm specializing in growth-oriented media, communications, education, and technology companies across North America and Europe. Since its founding in 1989, Providence has combined deep industry expertise with a collaborative investment approach, deploying over $40 billion across more than 180 portfolio companies to help build exceptional businesses and generate attractive returns. Michael joined the firm's Providence office in 1998. He is the chair of the investment committee and a member of the executive and portfolio review committees. He oversees the firm's portfolio operations group and serves as co-chair of the Providence's Responsible Investing Committee. I'm your host, RJ Lumba. We hope you enjoy the show. If you like the episode, click to follow.
RJ Lumba is the managing partner of GrowthCap and the executive chairman of Market Insight Media. He is the host of Growth Investor, a podcast featuring today's best investors, executives, and founders. In the minutes ahead, we'll uncover insights and strategies for accelerating growth and succeeding in business.
Michael, thank you so much for taking the time to chat with us today. It's a delight to be with you.
Hi, RJ. It's great to be on. Thanks so much for having me.
So what's interesting is we do not always have on folks who've been with their firms for as long as you've been with Providence Equity since 1998, if I'm not mistaken. I thought what would be fun is if you could share with us what the firm was like then in 1998 and what it's like today, because I imagine there's a stark contrast.
Well, when I joined in 1998, there were only 6 investment professionals. And we had one office in Providence, Rhode Island on half of the 9th floor here at 50 Kennedy Plaza. And so, we were a much smaller firm then than we are today. But foundationally, Providence was founded in 1989 as a specialist investment firm focused on the TMT sectors. And that was fairly novel back in 1989 when, for the most part, firms were generalists. But the founders of Providence, put a focus on the TMT sectors. And so what's remained true throughout our history is that, we've been focused on those industries, developing deep expertise in those sectors. And we've expanded the team. We've expanded the number of offices that we have, expanded the geographies that we invest in, to include Europe. But fundamentally, the businesses that we're investing in occupy the same sectors, although, the technology's evolved a lot over time, obviously. And so we've evolved, in terms of the subsectors that we're investing in to kind of match with the times.
Mm-hmm. And you've had a really close view as to the evolution of each of these sectors you focused on. I'm curious because so much has happened in the media space. If you could tell us a little bit about what you've seen evolve and kind of where you think media is headed.
So, when we were making early investments at Providence in media, it was in television and radio broadcast, in newspapers and magazines. So traditional media, which has obviously evolved a lot over the years. And I think, again, the benefit of being a specialist is that we've been able to have a perspective on where the puck is going within the industry. So we were founding investors in companies like Hulu when we saw streaming actually gaining traction, being a viable alternative to traditional linear broadcast. In the same way, we've been investing in sports for a long time as we saw the importance of sport and the fact that it can't be time shifted as easily as other forms of content can be. So being early in sport was also really important. So I think the media industry is going to continue to evolve. It's certainly something that has been fast moving ever since, we first started investing in that market segment. But there's plenty of opportunity ahead, I think, to generate attractive returns.
And one would think, maybe going back 3-4 years when you were watching sports, there seemed to be some innovation happening, but more or less things stayed the same. You were watching the same, major league games, whether it was in baseball or football or basketball. But now it seems like there's just so much more happening with maybe women's sports and different channels, different ways of maybe showcasing athletes, whether it's through Netflix or docuseries. And it just seems like there's more and more room to run. There's more leagues potentially that are forming Where do you see it actually going towards? Are sports franchises going to continue to increase in value? And then there's this interplay between sports and business media. Bloomberg has these really interesting programming where they bring in former high profile athletes. Just curious to get your insights overall as to where sports is headed.
Yeah, I think that sport is going to continue to be an attractive growth area within the media and entertainment space. And there are lots of different ways to play it. We have really, been focused on almost a picks and shovels approach to investing behind sport in companies like Populous, which is one of the leading architectural firms for stadiums and arenas around the world. So again, we see the benefit of all the investment that teams are making in new stadiums and arenas as a way to play that dynamic. Similarly, in a company like Wasserman, which is one of the largest sports and music agencies in the world, another way to play the increasing value of sport through what's being captured by the athletes and by the agency. Certainly, I think that the bet on the increasing value of franchises is not something that I would bet against. It's not something that we as a firm invest in. We haven't historically invested in teams. I think that it's a very different kind of investment, given that we've been control-oriented investors. Those are typically, minority investments with little control. And so we prefer to kind of play sports along the lines of, again, picks and shovels, as well as the media rights. We used to own a quarter of the media rights of Major League Soccer in partnership with MLS. We had a partnership with the New York Yankees to launch the Yes Network. And even in college sports, which is an area that's changing rapidly today, an investment in a company called Learfield, which owned the multimedia rights to a lot of the different D1 athletic programs. So there are many different ways to play sports. We continue to see, lots of different ways to tap into the growth. And you're absolutely right. It's an area where there are more leagues, women's sports becoming increasingly important. We do see just additional monetization opportunities across global sport.
I'm curious about your perspective on the celebrity infused investment ideas. For example, Wrexham, which, was an investment by Ryan Reynolds, and he was able to really grow that whole concept on multiple levels. Do you kind of look into that as a model and say, how could we potentially do that in another way or incorporate some of those strategies into certain media opportunities?
I do think that's an interesting way of pursuing opportunities. Again, it's not something that we tend to focus on exclusively. Like, how do we leverage, stars and celebrities to generate opportunity? But I think what Ryan Reynolds has done at Wrexham is absolutely brilliant. And it's interesting that you mentioned them, because Populous, are the architecture firm that we're investors in, actually won the mandate in the redesign of the new stadium that's being built at Wrexham. So we can benefit in ways like that, but certainly through, again, companies like Wasserman, where we have a lot of celebrity relationships, there are different ways that we can leverage those, those personalities and relationships to think about ways to capitalize on whether it's entertainment or sport.
Now, Providence Equity, that brand is a very well-known brand. It has a wonderful reputation. It's not easy in the competitive field of private equity. It's not easy to always maintain that kind of top tier reputation, but you've managed to do that. And, I suppose it's the DNA of the firm and what it stands for and how it's able to continually attract great talent. Can you talk to us a little bit about what makes Providence special?
I do think it comes back to culture. And that was one of the things that attracted me about the firm when I first joined. I think we've maintained a consistent culture over time. I think starting the firm in Providence outside of the major metros has created a slightly different culture at Providence. It was certainly different at the time that I joined than the larger firms in New York or Boston that I knew. And I think the focus here on partnership and collaboration has really been a common thread throughout the entire time, that I've been here. And that, I think, has played extremely well with entrepreneurs, founders, corporate partners in the marketplace. So I really do think that culture is foundational and critically important. And that has been a huge help as we've evolved over time. I think the fact that we really started with a growth mentality, the best performing investments in the earliest Providence funds were growth-oriented investments, early on in the mobile space or the cable space. And so having that kind of growth and positive mentality, I think it's, again, carried through to our current strategy, where that's still very much our orientation today. And so I think having a consistent culture, having a consistent objective in terms of the types of investments that we're making, and being good partners with the management teams that we're so closely aligned with has reinforced the reputation over time.
And along with the growth kind of focus, there's this concept of value creation. And then you do have kind of this way of working with your portfolio companies to maybe help out on the operational side or on the strategic side. Can you talk to us a little bit about how you view value creation with your portfolio companies?
Sure. And to start, I think it might be helpful for me to first frame the types of businesses that we're investing in, and then I can touch on the value that I think we bring. So as sector specialists, we're focused on, again, the TMT sectors in North America and Western Europe. We're usually investing in control positions in companies that are in the middle market with median enterprise values that are less than $500 million. They're typically growth-oriented companies that are attractive platforms for M&A. And in many cases, they're geographically limited when we first invest. So as I think about where we add real value to the teams or CEOs that we're partnering with, it first comes back to that sector expertise that we've been talking about, 30-year history of investing in these sectors. But where I think we're particularly strong on the execution side is in helping companies with M&A. And to put some numbers to that, in our last two fully invested funds, we had a total of 43 companies, and we've now completed over 260 follow-on acquisitions across those businesses. And 90% of those deals were sourced on a proprietary basis. So that process of identifying, acquiring, and integrating those acquisitions is a real strength of the firm. And in most cases, we're helping our companies build the capabilities to do that work over time. Another core strength is helping companies grow internationally. And I think our fund structure is an important key to that, given that we invest across North America and Western Europe out of one fund with a shared carry pool. So that structure heavily incentivizes our teams in the US and Europe to collaborate. And that's allowed us to be, I think, very effective at helping companies grow outside of their borders over time. So I think those are a couple of good examples.
One of the things about the private market space is that it's been growing, very consistently. And maybe there's some tailwinds as well, given there doesn't seem to be alleviation for companies to go public. So the private markets continues to grow. It becomes more competitive. There's new entrants. There's spin-offs of partners from existing funds, creating new ones. I imagine there is some competition, even though you are so focused on certain sectors and you're well known in those sectors. I imagine there's still some competition. What do you like to tell management teams and founders? I mean, you lead by reputation because everyone knows Providence Equity, but what would you, if it did come down to a competition with other firms, what do you like to say about the benefit of partnering with your firm?
I'll start by saying it is a very competitive marketplace. There's competition in all corners for good assets, and it's only become increasingly more competitive. With the influx of capital from infrastructure funds, as an example, it's made it a lot harder to invest in the communication space, areas that we have a lot of domain expertise in, whether that's fiber networks or data centers or other areas of the communication sector have become more challenging to invest in. The lower cost of capital that's come in from infrastructure. We're still finding opportunities, but it's more challenging for sure. But to answer your question, I think, where we focus the founders or CEOs or corporate partners that we're engaging with is on the fact that we are specialists and we invest in these sectors day in, day out. We are not visitors. We don't come in when the markets are hot and then exit them when they're not. We're there in the businesses that they themselves are passionate about, and we have a deep understanding of what they're trying to accomplish. And so I think with that as a foundation, we then talk to them about the value of the network that we bring to the table for the companies that they're trying to grow, and the history of examples that we have of working with businesses to help them do that. So where we tend to focus a lot of time in those conversations is just making sure that there's a shared vision and a kind of a shared mindset and culture. And again, convincing them that we're the kind of partner that's right for them. We may not be in every instance, but we're trying to find those opportunities where the partnership is really a strong one.
I'm always curious to learn a little bit more about personal background. As you were growing up in, high school and maybe early college, did you always think you'd go towards a career in finance? I think private equity is pretty specific, but what were you most interested, I guess, earlier on when you're trying to figure out what to do?
Yeah, so I did not know before going to college that I was going to end up in finance. I was an economics major at Bucknell University, and at that point started to develop an interest in finance and business more generally. But after college, I started my career at Anderson Consulting, what's now Accenture, in their telecommunications practice. And I was there for a couple of years. And then I went to Morgan Stanley for a couple of years before going back to business school. And I found both of those firms to be absolutely great training grounds. I learned a lot about business, about people, about how to grind. But over time, I didn't really find the role of being an advisor to be totally satisfying. I really wanted to own outcomes and become more deeply involved with the companies that I was passionate about. So during business school, I put my focus on trying to find a role on the principal investing side. But there were very few opportunities at that time. The industry was still small, and for the most part, firms were generalists. So in between first and second year, I joined Solomon Smith Barney in their media and telecom investment banking practice for the summer. I went back there after graduating. But in that first year at Solomon, I had the good fortune of meeting one of the founders of Providence Equity, Paul Salem, who invited me up to Rhode Island to meet the other members of the firm. And looking back, what really attracted me about the opportunity to join the firm was the small size of the team, the culture of the organization, and the fact that the firm was founded as a sector specialist, an investor in TMT. And again, at the time, that was relatively distinctive. And so, it was this good fortune of finding a firm where it was focused on the industries that I was interested in and passionate about. And so I joined in 98, as you said before, and it's hard to believe that I've been here now for 27 years.
There's a lot of folks that we talk to and that listen in that are emerging managers. If there was one piece of advice you could give to an emerging manager running their own firm, what would it be?
I think it's making sure that you've got a really well-defined niche that you're trying to occupy, really understanding what your strengths are as an investor and a firm, I think is really important in today's market, where again, the kind of the generalist model and just trying to find opportunities where you can lever up the balance sheet and try to generate a return that way. Those days are gone. So really finding a fit between your true capabilities and the opportunities you're trying to pursue, I just think is absolutely essential. And so trying to be really well defined in that, I think is, one of the only ways to attract capital in this marketplace, where it's become increasingly challenging to raise funds, particularly given the macro backdrop that we have.
hmm And thinking about your kind of long career to date and the various portfolio companies you've worked with or you currently work with, is there one that you find particularly compelling that you like to talk about and you view as like a real success case? Like we were really able to help that company.
Yeah. So, we invested back in 2007 in a company named ZeniMax, which is a video game publisher that we ultimately sold to Microsoft. And at the time we invested, it had one office and about 200 employees. And when we exited, the business had 15 offices across the globe, 2,300 employees. We grew the business significantly, both organically and inorganically through a string of acquisitions. And so, helping a company like that scale from a very small size, just one video franchise, into a global enterprise, and one that, was really attractive to a company like Microsoft as part of their overall strategy within video games, was incredibly fulfilling. And, it was a great growth story. It's one where, we could lend capabilities on both the execution side as well as the M&A side. And so there are plenty of examples throughout our history of helping growth companies in ways like that. But at least for me, having served on that board for over a decade, that was a pretty special experience.
Excellent. We're coming up on the tail end. I do have two final questions. One is, can you tell us about a person who has had a profound influence on you?
Well, I've had the good fortune of having some great mentors in my life, and including my dad and some very special people at Bucknell University. But when I think about a leader or founder who had a significant impact on my approach to business, I'd have to say it was Robert Altman, who was the founder and CEO of ZeniMax. He cared deeply about his team. He was fiercely loyal. The senior leadership team at ZeniMax at the time we exited was the same team as when we made our first investment in the company, which I think, as you know, is incredibly rare in a business that experiences so much growth. And I definitely think that's a reflection of Robert's ability to build a strong team and to get the best outcome. And he was incredibly principled in everything he did. He did not treat negotiations like a sport, which was a great lesson. He always lived by his word and had absolutely no patience for people who didn't do the same. And he was able to set a really bold vision for the company, and he never got distracted by what other players in the marketplace were doing. And on a personal level, he absolutely loved his family, and he was always reminding me to make sure that I was taking care of mine. Unfortunately, Robert passed away unexpectedly just before we closed the transaction with Microsoft, which was absolutely tragic. But he left a huge impression on me. He was a great friend, and I miss him a lot.
Wonderful. Last question. Can you tell us about a charity cause or other endeavor that you're passionate about?
Sure. So there's actually an initiative that I've been working on that sits at the intersection of both education and technology that I helped launch at my alma mater, Bucknell. It's a cross-disciplinary center for data science that's undergraduate focused, and it promotes data literacy for all students across the university's 3 colleges, which are arts and sciences, engineering, and management. So courses are being developed at the center and resources are being provided to help all students, regardless of their major, become data literate. And we have a fellows program that brings students together from different majors to collaborate on real-world projects. So a psychology major, and a computer science major, and a management major can all come together and collaborate with real-world data. So I'm excited about the center because I think giving students that kind of team-based experience and the ability to tell a story with data is going to be a really valuable skill set to have in the marketplace. And it's a different approach from what most universities are doing, where data science tends to be either very siloed within a department or graduate student focused. So that's a project that's been super rewarding to work on with the administration and the faculty and the students, and being able to launch something new that we hope will be a point of distinction for the university in the future.
Fantastic. Well, Michael, want to thank you again for taking the time. This has been a wonderful conversation.
RJ, thanks so much for having me.